Index funds are some of my favorite ways to invest. They are low cost, they give you diversification, and they have historically proven returns. And Vanguard is where index funds all started. In fact, the founder, Jack Bogle, was widely considered the founder of index funds. And the cool thing about index funds is that you can set it and forget it. And it's an amazing system to put in place if you don't want to worry about investing all day. Now, today we're going to be going through the best Vanguard index funds that I believe are fantastic to add to your portfolio. And you can look at some of these index funds and see which ones may interest you. There's two things to note about Vanguard before we dive in. The first one is Vanguard typically has its investors' best interest at heart. The way Vanguard is structured is that the investors actually own part of Vanguard just by investing their dollars in Vanguard. The second thing to note is there are two types of shares at Vanguard. There are Admiral shares and there are investor shares. Now, the investor shares, they are starting to phase out, so Admiral shares are more so the norm. But typically, Admiral shares might have a much higher buy-in than the typical investor shares. So sometimes Admiral shares can range anywhere from $3,000 to $10,000 to get into an Admiral share index fund. So if that is too much for you and you don't have that much saved up yet, what you can do is you can buy the equivalent ETF. And that will give you that workaround because ETFs are much easier to get into, especially if you're just starting out. All right, so let's get into our list. Number one is VTSAX. VTSAX I have held for over a decade. It is one of my favorite index funds in my portfolio. And what VTSAX is, it is an index fund that holds the entire US stock market on one index fund. And some people argue that you only have to hold VTSAX and you are completely diversified. There's a book called The Simple Path to Wealth by J.L. Collins, and what he argues in that book is he only holds VTSAX. And it holds thousands and thousands of companies within the US stock market. And the cool thing about VTSAX is you're holding holdings in something like the S&P 500, you're holding mid-cap stocks, you're holding small-cap stocks, so you get a little bit of everything to have complete diversification. Now, VTSAX has a very low expense ratio at 0.04%. You want to keep your expense ratio at 0.5% or less, and really, I only look at stuff that's 0.3% or less, because keeping those expenses low is incredibly important for your long-term returns. You do not want to be paying fees to your advisor when it's money that could be compounding inside of your own brokerage account. The second thing is VTSAX has a dividend yield of 1.57%, meaning every quarter you're going to get paid those dividends out, and the best thing to do is automatically reinvest these dividends back into your portfolio, especially if you're considering this portfolio as growth over time. Now, when you retire, you can take those dividends as part of your retirement plan, or you can continue to reinvest them as well. Then there's the turnover ratio. The turnover ratio for VTSAX is 4%. Now, this is fantastic because if you look at an actively managed mutual fund, meaning a mutual fund that has a fund manager who is buying and selling stocks left and right, what that happens there is it triggers a tax event. And you want to have as little taxable events as possible when you're investing in these funds because that lowers your tax bill. So turnover ratio is a very important metric to understand, and you definitely want to be looking into that as well. And the total return since inception is 9.81%. And 9.81% is a fantastic return because over time, if you're investing your dollars, a few $100s per month with a 9.81% return over the course of 30, 35 years, you will become a millionaire if you get that rate of return. So it's an amazing return to have in place. Now let's look at the returns over the last couple of years. So over the last 3 years, it's been 7.74% at the time of recording this. Over the last 5 years, it's been 8.53%. Over the last 10 years, it's been 12.09%. And over the last 15 years, it's been 9.77%. Now, the top 10 holdings within VTSAX are all companies you've heard of. It's going to be Apple. It's going to be Google, Microsoft, Amazon. All these major companies that you have heard of in the past are all going to be in the top 10 holdings of VTSAX. So if you're really interested in just holding one fund, VTSAX is a great option, and I encourage you to read The Simple Path to Wealth if you have not yet. Number 2 is VFIAX, and this is Vanguard's S&P 500 index fund. Now, the cool thing about VFIAX is that it invests in the S&P 500, and if you don't know what the S&P 500 is, it's the 500 largest stocks in the U.S. stock market. And it's a little over 500 at the time of recording this, but it's the 500 largest companies within the U.S. stock market. And what happens with the S&P 500 is that when a company is not performing performing well, it gets kicked out of the S&P 500 and a better performing company comes into play. This means that you can protect your wealth because they start to cycle in companies as they need to. So say, for example, you buy 3 companies in a stock portfolio, and you buy Apple, you buy some no-name small cap company, and you buy a third mid-cap company. Well, if a company within that portfolio does not do well, and it is 33% of your portfolio is truly going to suffer and it's going to go down. But if you're invested in something as well diversified as the 500 largest companies in the US stock market and one company isn't doing well, boom, it gets kicked out and it's not in the S&P 500 anymore, and a better company that's performing well gets dropped into the S&P 500. So this is why this is so powerful and why index funds are fantastic, because they weed out the bad apples. Now, the expense ratio for VFIAX is 0.04%, another really low expense ratio. So this is a great option for a lot of investors. In addition, the dividend yield is 1.60%, and the turnover ratio on this is 2.0%. Now, its annualized all-time returns are 11.05% at the time recording this, which is absolutely amazing returns. And the S&P 500 has returned a little over 11% since the time I'm recording this. And this is after we've had a bear market as of recent. Now, the total return over time, let's look at the total return over the last couple of years. Over the last 3 years, it's been 8.23%. Over the last 5 years, it's been 9.08%. Over the last 10 years, it's been 12.51%. And over the last 15 years, it's been 9.8%. So fantastic returns over the last 10 to 15 years. And it's something that you can truly utilize as a core piece of your portfolio to be able to build wealth. If you're looking at having a 3-fund portfolio, or you're looking to have something like a Warren Buffett portfolio where it's 90% stocks, 10% bonds, and this is a great option to have available to you. Now, the top 10 holdings, and this is going to be very similar to VTSAX. You're going to have Apple, you're going to have Amazon, you're going to have Google, you're going to have Nvidia, you're going to have Johnson & Johnson. There's going to be a bunch of different companies in there that you are familiar with that are fantastic to have as your top 10 holdings. Now, number 3 is one I don't see a lot of people talk about, but number 3 is VIGAX, and VIGAX is the Vanguard Growth Index Fund. So what the Vanguard Growth Index Fund is it holds a number of different companies that are large cap stocks, and it follows a large cap index. And so this holds a large portion of technology companies. So if you're very bullish on tech like I am, this holds a very large portion of technology companies within it. The expense ratio for this one is 0.05%, and the dividend yield is 0.64%. So it does have a lower dividend yield than the first two that we talked about. The turnover ratio is also a little higher because it has much less holdings. So it has a turnover ratio of 8%, and it has an all-time rate of return of 9.97%, which is another fantastic return over that time frame. Now let's look at the returns over the last 15 years. So over the last 3 years, it's had a 6.98% rate of return. Over the last 5 years, it's had a 9.79% rate of return. Over the last 10 years, it's had a 13.9% rate of return. Over the last 10 years, it's had a 13.19% rate of return. And over the last 15 years, it's had a 10.96% rate of return. Now, the top 10 holdings are going to be very similar to some of the other ones, but you're going to see a lot of tech companies in here, from Apple to Microsoft to Google to Visa, Home Depot, MasterCard are also in this top 10 as well, because we're looking for high growth stocks that can help you grow your portfolio over time. Now, if you want some extreme diversification, what you can do is add something like small cap stocks within your portfolio. Now, small cap stocks are smaller stocks on the stock market. You're going to get small cap exposure if you invest in the total stock market like VTSAX. But if you want full-on small cap exposure, what you can also do is invest in something like VSMAX or VSMAX. This is the Vanguard Small Cap Index Fund, and it has an expense ratio that is very low of 0.05%. The dividend yield is 1.43%. The turnover ratio is 17%. And the annualized total returns is 10.72%. So it has a much higher rate of return than a lot of these funds have had over that time frame. Now let's look at the rate of return over the last 10 to 15 years. So over the last 3 years, it's 6.90%. Over the last 5 years, it's 6.48%. Over the last 10 years, it's 10.3%. And over the last 15 years, it's 9.72%. Now, the top 10 holdings are probably going to be all companies you've never heard of. These are companies that I have personally never heard of unless you really dive deep and are really interested in stocks. So they are actually interesting to go look at these companies if you like to be an individual investor and you like to look at specific stocks. Diving into some of these companies is somewhat interesting. But here's Here's some of them. IDEX Corporation is one. Targa Resources Corporation, Steel Dynamics, Atmos Energy, First Solar. So some of these companies you may have heard of, but most of them you most likely have not. And this is why it's the small cap company, and getting that small cap exposure means you get a hold of some of these small cap companies. Imagine if you got a hold of a company like Apple when it was a small cap company. That would be an amazing time to invest in something like that. Now, if you want to build a 3-fund portfolio, one thing you're going to need is you're going to need international exposure. And so if you're looking to add international exposure to your portfolio, then Vanguard has a bunch of different options there. But one of my favorites is VTIAX, which is the Vanguard Total International Index Fund. Now, VTIAX has not performed very well. International stocks have not performed very well over the last couple of years, and it has an expense ratio of 0.11%. The dividend yield is much higher, though, at 2.81%, and the turnover ratio is only 5%. But the annualized all-time returns are only 4.68%. So let's look at the rate of returns over the last 15 years. Over the last 3 years, it's been 3.03%. Over the last 5 years, it's been 1.45%. Over the last 10 years, it's been 4.64%. And over the last 15 years, it's only been 3.14%. So a lot of people will argue that you need this international exposure, especially in a 3-fund portfolio, because you want to diversify your investments in case there's an issue with the US stock market, then the international stocks could pick up your portfolio. And the other argument is, well, all the US companies already have a ton of international exposure because they do business overseas all the time. So this is a big argument that you have to look and see how you feel about this, because here is the top 10 holdings within the total international fund. 1 is Taiwan Semiconductor, 2 is Nestle, we've all heard of Nestle, 3 is Tencent Holdings, 4 is Roche Holdings, and 5 is Novo Nordisk. Some other notable ones on there are Samsung and Shell as well. But you look at the top 10 holdings of something like the S&P 500 and compare it to these top holdings, and you got to figure out, do you want to hold that S&P 500 fund and some international exposure, or you want to have it all in the S&P 500 or in something like VTSAX, which owns every stock in the US stock market. Now, if you're going to have a 3-fund portfolio, you also have to have bond exposure. And the reason why people like to invest in bonds is because it reduces the volatility within your portfolio. What is volatility? Volatility is how much your fund goes up and down in value. If you think of something like cryptocurrency where it shoots up in value and then comes back down in value, it is a wild roller coaster ride to be owning something like cryptocurrency. Well, if you want to reduce that, stocks are usually more volatile than bonds, where bonds will kind of level it out for you and stocks will kind of go up and down over time. Historically, that's how it's been. So people add bond exposure to their portfolio to reduce the risk, but in addition to level out that volatility, especially if you're an emotional investor. Now, if you're a young investor, I always have the majority of my money into stocks and high growth stocks, so things like VTSAX or the S&P 500. And the reason for this is because we have a longer time frame where we can allow this money to compound and you can take those risks. But at the same time, if you don't want those risks, you want to add some bond exposure, here's a great option for you. Now, this is Vanguard's Total Bond Market Index Fund. It is VBTLX. And with VBTLX, you're going to get the Total Bond Market Index Fund. So inside of VBTLX is securities in the United States government. It's got corporate bonds. It's got institutional bonds. It's got mortgage-backed securities. So it's got a bunch of different diversified types of bonds within this one fund. Now, bonds have returned way less than stocks over time frame, so you expect a lower return here, but the expense ratio is 0.05%. The dividend yield is a little higher, so it's at 2.26%. The annualized all-time return is 5.21%, and the turnover ratio is much higher because bonds mature, so it's at 69%. Let's look at the last 15 years and see what we're working with here. So the last 1 year, it's negative 9.2%. The last 3 years, negative 2.2%. The last 5 years, 0.71%. The last 10 years, 1.3%. And the last 15 years, 2.67%. So as you can see, unless you really want to reduce that volatility, you are giving up a ton of growth and a ton of compounding potential by investing in this total bond market fund, because historically, stocks have outperformed bonds. Now, the top 10 holdings are all U.S. Treasury notes with different maturity dates, but like I said, it does have a diversified portfolio of bonds, but that's what the top 10 holdings are within this exact fund. So if you're looking to create a 3-fund portfolio, then you can add international stocks and you can add bonds as well, because the way the 3-fund portfolio works is that you have a portion of U.S. stocks, you have a portion of international stocks, and a portion of bonds within that portfolio. Now listen, if you guys want to learn how to invest in index funds, we have a course called Index Fund Pro that walks you step by step. We hold your hand through this entire process on how you can learn to invest in index funds, and we do analysis on individual index funds just like this all the time, and we are constantly adding getting more analysis on some of these stocks. It's well worth the price. People could charge hundreds and hundreds of dollars for this, and we made it under $100, so really excited for you guys to check that out as well. Now, if you guys have any questions, make sure you leave them down in the comments below, and don't forget to like, subscribe, hit that notification bell as well, and we will see you on the next video.